Very good morning, my dear friends. In this video, you are going to watch how you can score 100% for the board exam through quick revision of all the topics in accountancy. And my dear friends, in this video, you are going to watch only the partnership area where you can score 36 marks. What are the areas you have to concentrate, how to answer for the question, you will get very quickly in this video. See, fundamental chapter is very important. There you have to remember what are the basic characteristics of features of partnership. And remember, there will be an agreement. What is the minimum and maximum number of partners, legal business done by them, how they will share the profit, and unlimited liability. All that things you have to remember. And very important area, the rules applicable in the absence of partnership deed. Profit sharing equally, interest on capital not given, interest on loans and advances 6% will be charged, and interest on drawings that also not given, and any remuneration, maybe salary or commission to partner, will not be given. And without the consent of other partners, no one will be given permission, and without the consent of other partners, no one is able to use the capital of the firm also. Partners capital account, two methods, fixed capital method and fluctuating capital method. You have to remember, in fixed capital method, we are preparing two accounts, partners capital account and current account. Capital account include only the opening balance, any additional capital, and any permanent withdrawal of capital. And the partners current account include all the other adjustments like interest on capital, salary, commission, share of profit in the credit side, and in the debit side, drawings, interest on drawings, and share of loss. In fluctuating capital method, the second one, here partners capital account only prepared. It includes all the items, increases the credit side and decreases debit side. Profit and loss appropriation account is very important area, and the question you will get as an integrated question where the topics are integrated. Preparation of P&L appropriation and the profit guaranteed to a partner will be integrated together. You have to remember, in credit side, profit and loss, profit balance will be there, then interest on drawings comes. And profit and loss, if there is net loss, that will come in the debit side. And all the expenses related to the firm, interest on capital, salary to the partner, commission to the partner, then reserves, interest on partner's loan will not come in this account. That will be treated as a charge. And you have to remember, all these things will be recorded, and we will find the divisible profit. Divisible profit will be shared among the partners in the ratio, and we'll check the guarantee of the partner, and the guaranteed amount, if there is any deficiency, that will be shared by other partners in different ratios. And the opening capital is the capital used for calculation of interest on capital. If it is not given, how to find out the interest on capital? Closing capital plus drawings minus share of loss minus additional capital. Interest on drawings, two methods, simple and product methods are there, and we have to remember, if we want to calculate interest, drawings into rate by 100 into number of months by 12. But nowadays 1 mark questions are asked. 1 mark questions are asked like that. Sometimes we have to find out the missing values like monthly drawings or the rate of drawings like that. This is the table showing the average period of different cases of interest on drawings calculation, and monthly drawings beginning 6.5 months, middle 6 months, end 5.5 months. If it is quarterly withdrawal, beginning it will be beginning of the month or beginning of the quarter, it will be 7.5 months, middle of the quarter it will be 6 months, and end of the quarter it will be 4.5 months. And half yearly, if it will be see, all these type of average period concept you have to remember. And profit guaranteed to a partner, always remember the steps. We have to share the profits as per the ratio. Then we have to find out the deficiency of the guaranteed partner, and it will be given by other partners in their all ratio equally, or sometimes it will be given by only one partner. And remember the preparation, another important area in the fundamental, that is the preparation of adjustment table. And definitely 3 mark question will be there regarding that area. You have to remember how to prepare the adjustment table and everything. 3 mark question, sure question. Change in profit sharing ratio among the existing partners. You have to remember the calculation of sacrificing ratio and gaining ratio. Equation for sacrificing ratio, old ratio minus new ratio, and gaining ratio, new ratio minus old ratio. You have to remember that. And treatment of goodwill, here also we have to find out the sacrifice or gain, and based on that we are writing the entry. Common entry, it will be gaining partners capital to sacrificing partners capital. And if there is any amount of goodwill already appearing in the firm, that will be written partners capital or current account debtor to goodwill. And the accumulated profit and losses will be shared using this entry. General reserve account debtor, profit and loss credit balance account debtor, investment fluctuation reserve account debtor, workman compensation reserve account debtor to old partners capital individually in the old ratio we will share. And you have to remember accumulated losses, old partners capital or current account debtor to profit and loss debit balance to advertisement suspense account, and to deferred revenue expenditure will come, and that also shared in the old ratio. Very, very important area in the final accounting answers. We have to prepare the revaluation and the capital. 6-mark question. Revaluation account credit side, increase in asset, decrease in liability, unrecorded asset comes, decrease in asset, increase in liability, and provision for doubt debt. Then unrecorded liability will come in the debit side, balance will be shared. Admission of a partner, you have to remember the calculation of new ratio. Different cases already, you know, a lot of videos are available in my channel. You can search that also. And sacrificing ratio, please use the equation. 1-mark questions sure will be there. Revaluation already discussed, but you have to remember how the profit will be shared in the revaluation at the time of admission. The profit will be shared among the partners only, among the old partners, not to the new partner. And adjustment also, reserves and losses will be shared among the old partners only in the old ratio. Always remember how to share the accumulated profit and losses. Treatment of goodwill is very, very important. The new partner will bring goodwill in the form of cash, and in sometimes not bringing, but the first entry will be cash accounted to new partners capital and the premium for goodwill, and premium for goodwill will be shared in sacrificing ratio among the old partners. And if there is any goodwill not brought by the partner in cash, entry will be new partners current account debtor to, you know very well, sacrificing partners, old partners. And when there is goodwill appearing in the firm, that will be written off only among the old partners. That will be old partners capital to goodwill. Please remember that. And retirement and death chapter also prepare the areas like calculation of new profit sharing ratio, old share plus acquired share of the partner, and outgoing partner share will be given in different. That gain will be calculated using new ratio minus old ratio. Treatment of goodwill, only 2 cases you have to remember. When goodwill already appearing, it will be written off among all the partners. So good entry will be all partners capital or current account to goodwill. That will come in the debit side of capital account, and the retiring partners share will be given by the other partners. So entry will be remaining partners capital to retiring partner, or gaining partners capital to sacrificing partners. Revaluation account, here the profit, only the concept profit is shared among all the partners. Profit transferred to all the partners, or loss transferred to all the partners. Accumulated profit, losses, and reserves will be shared among all the partners in the all the partners capital in the old ratio. Whatever may be profit or losses, that will be shared among the all partners, including the retiring or deceased partner. And sometimes 6-mark questions will be there for preparing the deceased partner's capital account. Please remember, in the credit side, opening balance, interest on capital, salary, commission, and undistributed profits, revaluation profit, and gaining partner's capital, goodwill treatment entries. Then also profit and loss suspense means share of the deceased partner, share of profit of the deceased partner. Debit side, the undistributed losses will come, and revaluation loss will come, goodwill written off portion will come, then drawings, interest on drawings, profit and loss suspense if it is loss up to the date of death. And you have to remember, every time the entry profit and loss suspense account is the account we are opening to record the amount or share of profit of the deceased partner. This is the entry what we are writing for that. And please remember that account will be closed, and prepare 2 methods. We are using 2 methods for the calculation of the share of profit also. This is time basis, on the basis of time, average profit into number of days by 365, or number of months divided by 12. into share of the deceased partner. And if it is on the basis of sales or turnover, we have to remember this equation: last year's profit divided by last year's sales into sales up to the date of death and share of the deceased partner. That's all regarding that area. You please remember dissolution is another area. 4 mark plus 2, 6 mark question we can get. 4 mark plus 2, 6 mark question we will get. That dissolution. Here you have to remember the format of realization account. From that you have to prepare journal entries. Only in rare occasion they are asking for the preparation of what? The account. But you please remember, from the balance sheet we are transferring assets in the debit side and liabilities in the credit side. Then the selling price of asset will come in the credit side. Selling price of liability, selling means payment of liability, will come in the debit side. And if any liability is paid by the partner, it will be 2 partners capital, and if the liability is paid by the firm, it will be 2 cash or bank. That is the thing. And the profit will be transferred to partners capital, and a small loan account you have to prepare. And remember how to finish the account. If they are asking preparation of realization account, a small loan account of the loan given by the partner to the firm. And please remember all these things. And this is the loan account format you have to remember. And this is the partner's capital account at the time of dissolution. There also all the things are coming, increases in the credit side and decreases in the debit side. But you please remember, the practice should be for the 36 mark. And my dear friends, next video is also coming, part 2. There you will get the ideas, quick revision regarding shares, debentures, and the financial statement analysis. All the very best for your exams. Try hard, practice more, and get the maximum. All the best.